Hey there, let's talk about financing your restaurant project. Many variables influence the amount of money you'll need for your project, as well as your ability to qualify for financing. You're going to need much less money if you're buying an existing restaurant that does not own the property or starting a new restaurant in a leased space. There are also many variables to how much you'll need if you're purchasing an existing operation, whether it owns the real estate or not. Now, this depends on the size of the restaurant, its location, the value of goodwill, if any, what's the history of cash flow, and the financial performance of this restaurant over time. All these variables affect the amount of money you'll need, and all these details must be really well thought through as you complete your business plan. Know that commercial banks and credit unions by nature are really conservative, and their interest in cooperation and funding restaurant projects really depends on the state of the economy, your timing, your industry experience, the amount of your personal cash contribution and your collateral, the risk tolerance of this particular financial institution, etc. Now, the following list is really important, but not exclusive considerations when determining your needs and ability to borrow. So what are you going to need? First of all, an excellent credit score of 750 or above over a long period of time really indicates your fulfillment of debt obligations and paying your debts as agreed. Now note, if you have many open credit cards that you don't use, it's really a good idea to close these accounts out before applying for new financing, as the amount of open credit available to you is considered a negative. You may also need a co-borrower depending on the amount you're seeking to borrow, and this co-borrower also must have an excellent credit score as well as tangible assets. A personal guarantee and pledge of assets might be required, especially if you're a first-time borrower and or the loan amount is significant. You might have to sign a personal guarantee and even pledge your house and other assets as security against the loan in addition to your down payment. A personal financial statement is available to download online, and it's basically a summary of your income from all sources, your existing debt balances, real estate holdings, and other tangible assets, your bank account balances, your investments, your life insurance policies, and your net worth. Note that you're going to need 3 years, at least the last 3 years of personal tax returns at a minimum. Now, there are other resources available that can help as well. Now, the United States Small Business Administration and other regional loan programs were really established to assist minorities, low-income borrowers, and others who might otherwise not qualify for conventional bank financing. Now, the SBA and some regional programs assist borrowers in putting together their business plan, assembling and crunching numbers and putting their financials in order, as well as other specific projections prior to applying for bank financing. And then if you're approved, this is the good news, the SBA or the regional loan program will actually act to guarantee your loan. So check with your bank or accountant for more information. You're going to need a business plan. Now, we talked a lot about business plans also in Module 1, where I walked you through every aspect of what they're looking for in a business plan. Again, it's a comprehensive description of your proposed restaurant, including marketing and financial plans, as well as 3 years of conservative financial projections in the form of pro forma profit and loss statements. You're also going to need a personal down payment, and that's generally 20% of the amount of the total financing you need that'll be required as a down payment toward the loan. Now, this may come from your personal savings. You might liquidate investments or other assets. You may ask friends or family or even other angel investors. But note, any and all these personal funds are considered subordinate to any conventional bank financing that you are offered, and an agreement must be signed by you that states that bank approval must be obtained before you can repay any of these personal obligations. They're also very curious about your current job. Are you quitting your current job? And if so, how will you live and replace this income while you're starting a new restaurant? In very unique situations, will you have severance pay or a pension that'll help fund the business or help you live down the road? If you have a spouse, is their income enough to rely on, or a partner's income, especially if investments are pledged? Now, in some cases, a 401k or a qualified retirement plan may be used for a down payment or investment capital, but again, check first with a qualified tax attorney or your CPA. Significant industry experience is super important, either as a restaurant or a hotel general manager, a kitchen manager, or at least a head bartender with operational skills. In general, vast exposure in a restaurant setting, ideally working several departments or stations over the course of several years. Remember the old adage, learn all you can on someone else's dime. It certainly applies here. What's your motivation, your sense of urgency, and your track record of accomplishment? Now, banks see many dreamers with really half baked ideas and plans and very little experience. The successful borrower is going to demonstrate a clear vision, a strong work ethic, a well thought through business plan, the ability to answer challenging questions regarding the proposed restaurant, industry experience, and above all, skin in the game, resourcefulness, resiliency, and a backup plan if things don't go as planned. What's your plan B? How about equity in the restaurant property? Buying an existing restaurant that owns the real estate or starting from scratch with land and new construction can be a real advantage, as this provides added security for the loan with the bank, as they then have a tangible asset value that can be liquidated to repay the loan if things go south. Note carefully, banks will only loan up to 85% of the value of buildings and equipment only, and not the land. Okay, so note that banks will only loan 85% of value of buildings and equipment only. Lines of credit. Once you've successfully borrowed and you've shown a track record of operations, you've paid the loan obligation as agreed over time, you may then qualify for an additional revolving line of credit for temporary cash needs, anticipated seasonality, or slower periods. Now, some lines of credit offer interest-only payments on the principal balance with a balloon payment when the debt becomes due at the end. Lines of credit usually need to be renewed each year upon bank approval. So how about a final note on your finances? The number one reason for failure: restaurants are undercapitalized. It happens all the time. I know from experience. I've started 2 restaurants, both of which were undercapitalized, and it was a real challenge making a go of these until cash flow kicked in. So why is this true? Because costs are always higher than planned. It's impossible to anticipate everything. And again, access other sources of capital, such as credit cards, may get you through. So again, let's go over that one more time because it is so important. Things always cost more than you think. It's impossible to anticipate your true cash needs when you're buying a restaurant, and even more so with new construction. And you also have to allow for necessary working capital. So no matter how much you qualify for as a borrower, you should still have access to additional sources of capital. And if you're just starting out, it's really not likely you're going to qualify for lines of credit with the bank just yet. So consider personal credit cards. You know, it's really a great source. You can max them out, and then if your restaurant is really successful quickly, you can pay these off. You know, I started 2 new restaurants. One was new construction. The other, I purchased the real estate. Both situations, again, I was undercapitalized, and it was only my personal credit cards that saw me through the short term until the cash flow kicked in. So in the latter case, this is really interesting. I actually needed to sell a piece of real estate after the doors opened to satisfy short-term cash needs. So be resourceful, and I'll see you next time.